Hey, what's going on, everybody? Today we're taking a peek at theta and trying to figure out if our previous ideas are still on track. And today we're going to use an indicator called the bull market support band. And this is the band right in here. So, what is the bull market support band? Well, basically, it's I'll show you right here. It's the 20-week SMA combined with the 21-week EMA. Now, why is that important? Well, instead of me telling you, I'll just show you. Check this out. So here's the price of Bitcoin back in 2016 through 2017, right? 2018 actually. And this was the run up from back then it was 200, less than $300, and we ran all the way up to $20,000. That was the bull market of all bull markets, if you ask me. I don't think there'll ever be a bull market like that again. I mean, obviously some altcoins, right? Theta, maybe Theta. No, actually, yeah, Theta for sure. Not financial advice, but Bitcoin, as far as 2017 goes, that was the showstopper. And then you had, of course, XRP going up pretty radically, but not as beautifully as Bitcoin. And that's what we're going to discuss right here. And then we're going to apply this to Theta. So look how beautifully the price of Bitcoin went up. Nice and steady until we reach the top. And what's very important in this chart is the bull market support band. If you don't know anything about charts, didn't know how to trade, didn't do anything, all you knew was to know how to buy, you could put, a blindfold on and only look through that blindfold, seeing the bull market support band. If you were to buy the price, right, buy Bitcoin, every time it reached the bull market support band, you would have done it perfectly. So basically, the bull market support band is supporting the price. We pump up, it's supporting the price. We pump up, pull back down, supporting the price. Pump up, pull back down, support of the price. And then again, support of the price. Again, support of the price. Again, support of the price. And then we came all the way here. This candle did not come down, right? So it got over exuberant. It got, as you would say, parabolic. And all things lead to an end when things get parabolic, right? So this whole entire time it was supporting the price, and that's why it's called the bull market support band. Now, how does that help us in a bear market? Well, in a bear market, it is called the bear market resistance band, right? So you have the bull market support band. When the price comes below and then goes back up and it gets resisted by the band. See, the band can work in two different ways. It can support the price or it can resist the price, right? So if you're not sure where the support is in a trend or resistance is in a trend, then this indicator right here on the second one, bull market support band, right there, I highly recommend getting that. So it's taking weekly data and it's trying to figure out, it is essentially the moving averages, and combining both of them together gives us, support and resistance. So right here you can see all of this was resistance in here. And then check this out right here though. When Bitcoin broke above the bull market support band, it did not come back down to test the band. Instead, it continued to rise. So think of the band think of the price as an electric car, right? And then think of the band as a charging station. If the car goes too long without charging, it's going to die, right? But if you go back here, notice how the car is going, it's charging, it's going, it's charging, it's going, it's charging, it's going, this allows sustainability, right? The problem here when we ran up, which is why nobody believed this was the real deal, was because it never came down to support the band. It just was an exuberant rise, right? Okay, so now go back here. Look at the bull run we had here. This is the problem. This is why so many people got screwed on the bull run, is because it was very short-lived. People didn't believe that it already ended, right? The bull market ended up here. People think, oh, it ended here, but no, this is just a correction that took out the liquidity. This was the top, right? So basically the bull market started from here and went to here. And I was like, what was that? That was nothing. It barely got going. So the problem here is that here was C19. We broke above the band. We tested it. Not really, but almost. We came back up. We tested it officially, and then we went all the way up. And then here we never came to test the band. We came up again, never tested the band. We came up again, never tested the band. What happens? This is the electric car, and the electric car is dying. If the price would have taken more time, right? If it took more time and it corrected more through price, right? Because you can correct either through price, or you can correct through time, or you can correct through both, right? So the price did not correct neither. So if it would have taken time, it would have went straight into it. If it would have taken price, corrected through price, it would have went down and tested it here. That test is very important because it confirms every leg higher, right? So it's just like a back test, right? When you break out, you back test the band. You go up again, you back test it again. And basically testing over and over and over gives reassurance that the price is going to continue higher. But notice here, it did not touch the band, not even one time. So what happened? Distribution occurred up here. Price fell through, right? And then an automatic rally. And you can see here, we actually did test the band. We broke out. We tested the band. We lifted higher. We actually landed perfectly on a 9. And by the way, the 9s are exhaustion indicators. Every time you see a 9, if it's a red 9, that means sell. If it's a green 9, that means buy, right? But that you don't blindly trade it based off, if it's red or green. A lot of other things have to be lining up. So let me just take that off so it's not confusing anybody. Okay, so now it looks much cleaner, right? We have the test, but we failed to break the previous high. I mean, we did, but it was a fake out, right? And it was just to grab liquidity. Then what happened? We came down, and then right here, this is the point where everybody should have got out of the market, right there. Right there. Because that was the sign, that was the signal to exit the market. Why? Number one, we didn't get any test going up. Number two, we failed to break out. Number three, we broke below the band. Number four, we retested it as resistance. That's 4 reasons to get the heck out. Now, did you get out? Most likely not, right? Most people stay in because why? Because they're hodlers, and there's nothing wrong with hodling. There's nothing wrong at all. But if you're trying to preserve capital, then identifying that right there is very important. Now, in hindsight, anything can be possible, right? Obviously. But in that moment, nobody wanted to believe. Even I had a hard time believing that the bear market was here because of the time, and a lot of it had to do with certain other things that I won't get into today. But basically, long story short, this was the start of the bear market. So we came up again, resistance. And if you didn't get out here, you should have got out here, right? Resistance. And I actually did exit a lot of altcoins right in here. And then we came down, right? Came down, resisted again. And then we came down. And then what happened? We went sideways. We developed our base. We broke out. And now, boom, look at that. This was the first time we broke above the bull market support band since the bear market started, right? I mean, I guess you can count this too, because the bear market had already started right in here. But officially right here was the breakout. Then we back tested. This is the first back test of the bull market support band. So now look at where we are in Bitcoin. And I'm going to circle all, and you say, this is a theta video. What's going on? Well, in order to understand, we got to go through Bitcoin, and then we'll circle back. So looking at the price of Bitcoin, we broke out, tested the band, came up, tested it again. You can see how perfect this thing is supporting the price. Now, obviously right here you close below, right? And then we came back up, and then look at this. This was the scary candle right here, because first of all, it was a bearish engulfing candle. We broke below the bull market support band, and then we kind of went sideways, and then you can see here resistance. So what I was looking for was a retest and a continuation down. We didn't get that, right? Because I wasn't paying attention 100% fully at the time. What I was looking at is, as you know, Wyckoff accumulation. And I was looking at this as the spring, and this was the rally, right? Okay, so now here we are. Price is way the heck up here. The band is way the heck down here. And look where the band is lining up. It's lining up perfectly with 31K. So does that mean we're going to come down there? I think eventually we will. I don't know when, but I think eventually we will. So what does that mean for theta? Well, we'll get into that. But in the previous videos, I talked about a few different scenarios. One of them being, Bitcoin had this run up. We went sideways. We developed our base in here. We broke out. And then what comes next? We come down. We back test the top of the resistance, right, to make it the new support. But then also you have the bull market support band in here. So you have two different points of confluence, the band and the top of this, and they're all converging right in here. So I look at that very seriously for a potential buy the dip situation. Now, obviously, looking at the price, it looks incredibly bullish. There's no signs yet of a big pullback coming, but we could be getting close. So if I zoom in a little bit here, you can see where the band is, right? Looking at this as a channel, right? So the question is, what is that? What is going on there? Well, it's an ascending channel, and most ascending channels break to the downside, but oftentimes they can sort of break to the upside, where they play around, they break up, and they make you think they're going higher, but then they come back down. And then that's probably when we can come down, right? And here's the band, and the band's curling up, right? And we come down, we test it, we hold it, and then we continue higher. I mean, that's just an idea. Is that going to happen? I don't know. But that's just an idea. And that would get us down to the back test of this area, right? Almost. So, anywhere in this range would be a good indicator. Now, I'm not really going to talk about that because we're not there yet. We still don't know what this is. We have to wait and see if we get a breakout. I mean, a few ideas, right? This could be a rising wedge. A rising wedge is bearish, right? 1, 2, 3, 4, 5, and then we go down, right? That could be a rising wedge. Or you can look at it like a potential ascending triangle, which is bullish, right? Which is bullish. And you have your triangle here. So rising wedge or ascending triangle, your guess is good as mine. But you could see this was a little fake out. This was a little fake out, right? And you could see how they're sort of going higher, right? And if you take the RSI, you can see extreme bearish divergence all over the chart. That doesn't mean it's going to go down. It just is an indicator. See how the prices, the RSI is going down here. See, it's trending down, and the price is trending up. RSI trending down, price trending up. That's bearish divergence. Okay? That doesn't, obviously, the divergence can be taken out. All we need is a big pump, right? And it can be taken out. So we got to use a cluster of indicators. So the best thing to do for me is just to wait. There's no rush for anything. Okay, so basically pulling back the bull market support band. Now let's apply that bull market support band to the price of theta. And let's see if we can get anything going here. So here's the price of theta zoomed all the way out, and you can see the band is somewhat useful, right? Not really in sideways consolidation, but you can see it held support, tried to act as support, came back down. But look right here, you can see right there was resistance, came down, held above it, came back down. But then the run up was interesting because we never really got to test it, but it actually held pretty well, right? We shot up, the band sort of supported the price, not testing the price, but supporting it. And same for over here. And then we had this exuberant parabolic rally that just was not sustainable. And then look what happened. Now it's acting as resistance, 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 resistance. And now look what just happened over the last month. We officially broke above the bull market support band. So that is a very bullish sign. And not just, you could say, well, we broke above it here too, but not like this. Look at that big rally. It left the bull market support band in the dust. Okay, so now what? So anytime you break above the bull market support band, in order to confirm the bull market support band, you want to come down and back test it, kind of like this right here. So you see how the price is below it. Price breaks above the band right here, goes all the way up, comes back down. It never got to test it officially, but you can see the sideways consolidation in here sitting above the band, which is, almost good enough, right? And it continued higher. So that is sort of what I'm expecting here for theta. And if we take our previous ideas, right? So going back to the previous video, one of them I stated was trying to develop the right shoulder. So we have this left shoulder, we have the head, right? Maybe we have another hit to the high, which I think is very possible. we're consolidating, we hit the high, and then we come down, develop that right shoulder, and then go. And then what that will allow us to do, right? What that will allow us to do is, let me change the color real quick. So the band is right here, right? Here's the band. So if the band is traveling higher, right, we can get something like this. So then the price, right, the price comes down and it tests the band. Or maybe it comes a little bit short like the previous wave we looked at. So we come up, we come down, we test the band right in here, and then we carry on. So I would say right about there. And that's where potentially the price and the band will meet. Now this is just an idea, right? And basically this idea is giving Confluence in the other idea, which is an inverse head and shoulders. So we have the head, we just need the development of the right shoulder. So the question is, are we going to do this right here? We're consolidating. We hit the high, then we pull back, right? And then as we pull back, the band is coming up, right? And then we come down, we test the band right in here, and then we go, right? And that would be a completed left shoulder, right head, and the right shoulder. And that would make sense, right? Now, you can say, well, the price is going to come down now, but it looks like it's in the middle of nowhere. See how it's up here, the resistance is up here, and the band is down here. So it's in the middle of the resistance and the support. So we're dead in the middle. So here's the price, dead in the middle of resistance and support. So we have to wait for this range to break. Now, if the range breaks to the upside, I'm going like this. We're going to hit the resistance, just like up here. All of this is resistance. We come up here, we hit it, then we pull back. We pull back into this right shoulder. Maybe the shoulder's big, right? Maybe it comes all the way down here. I don't think so. I think the shoulder's gonna meet with the band. So here's the band right in here, and it's gonna meet somewhere in here, and then we go. Okay, so that would be the first option, right? The second option would be basically, here's the band. Let me actually go down to the smaller time frame so it makes more sense. So okay, I'm on the 4-hour chart, and we can see 1, 2, 3. 1, 2, 3. 1, 2, 3. Or 5. And what would that be? An ABC or a WXY, right? It actually would be ABC. So you have 3, which is an A, then you have 3 up, which is B, then you come down for 5, which is C. And what does that do? That gets us right down to the bull market support band. So you saw the first idea, right? That was the first idea. This is the second idea. The second idea suggests that this is an ABC. So let me just draw the band in here. The band's coming on up, just like that. right? So let's zoom out and what that would look like. It's kind of hard to see, right? Let me actually, there we go, right there. So basically that's just a 1-2, right? So we have, instead of coming up here and then making that right shoulder, we're just going to do it right now. We're just going to get it out of the way and come down and test the band. So we have this impulse to the upside, and then we have A, B, C. We test the band, and then we go, right? So that's option number 2. So what do you think? You think option number 1, we have another push to the high, then the development of the right shoulder, or number 2, this rally was sufficient enough and now we're in ABC, right? Or option number 3, it could be a mixture of both, right? So this was 1, 2, all of this is 3, ABC, which is wave 4, right? So you have 1, 2, 3. Now we're in the process of wave 4, and then we come up for wave 5. Okay, so, and then once we're in wave 5, then we develop the right shoulder, which would be another test, right? Another test. So we come down, we test it once, we come up, we run into the resistance, we come back down, and then we test it again, right? And you may say that doesn't make sense. Why would it do that? Well, because it's any movement like this would be correlated with Bitcoin. It would basically, Bitcoin would be doing something, and Theta would just be sort of grinding out what Theta or what Bitcoin is doing, right? So, zooming out, this run up here, and then the ABC, that would still be a part of the head, right? So it could still be a head and shoulders, right? Where your shoulder, your head, and this ABC is just a pit stop in the head, right? Because we're basically halfway complete with the head, right? So boom, 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 we come down, we pull up, that's the head, then we pull in for the shoulder, then we back test the top of the resistance, and then we go to the moon. So there you go. That's kind of what I'm thinking here. Those are 3 ideas. A little different, I guess you would say a little different than the previous ones, right? I still stick by the previous ideas, which is the red path, right? Red, I think it's red, purple, and green. So basically the red would be 1, 2, 3, 4, 5. And this is some diagonal, right? And then we go. Definitely possible. Still possible. That's the red path. Okay. The purple path basically suggests this is one wave right here. Take 50% of this wave. Here's the wave. Cut it in half. So you have shoulder, head, you come up, maybe you hit another high, then you come down 50% of this wave. Not come down 50%. I'm talking about taking this wave and cutting it in half. 50% of the wave will come back down and then continue higher. And that will be a inverse head and shoulders. So sort of a little mixture of the green and purple path that I had tweeted out some time ago. And then the green path obviously is just, this is an impulse, this is a bull flag or sideways consolidation. We're going to spike the high, take out this liquidity, take out the top of this right here, break the resistance, and now it can go two different. So there's a derivative of the green path, right? The green path suggests we come up here, we back test, and we continue higher. And that would be like a 1, 2, 1, 2, and then we're going. The ultra bull count. The other would suggest we get up here and then we pull back down to develop that right shoulder, right? Without necessarily breaking the top. Maybe just coming up to the resistance, then coming down to create that right shoulder. And it would still be an inverse head and shoulders. Just the way we get there is a little different. So I hope that helps. I don't want to make my video's too long. I'm sorry, I just rant and rant and rant. But basically, I gave you 3 ideas, or actually more than that. But just reiterating real fast, we'll run through it one more time and basically summarize my thoughts. So this is all going back to the bull market support band. If I had to guess, we're going to test this bull market support band at some chance. If you're wanting to buy Theta, by the way, this is not financial advice. Anything I say is not financial advice. I could be totally dead wrong on everything. So just be aware of that. This is the bull market support band, and basically I'm believing that we're going to come down at some point and test it. Now, when is the question, right? The price can get way up here before we come down and test it, right? So at that point, it wouldn't have been worth it. It would have been just better to buy it here than wait for it to come down and test here. So we have to sort of take it day by day. So basically, in conclusion, starting with the ultimate bear, 1, 2, 3, 4, 5, then we go. Number 2, shoulder, head, A, B, C. We come down, we test. This is the one I would actually prefer, because then it gets the correction over with, and then we can get the heck out of here faster, right? So if you're a bull, this is probably the best way. We ABC, and we touch the band. This would be the best buying opportunity, by the way, right here. Not financial advice. Right there would be the best buying opportunity, because you break out, you come down in an ABC, and then you back test the bull market support band. Then you continue higher, right? And then we can probably get the heck out of here. Or, and that would be the shoulder, right? Or a derivative of that would suggest that this is shoulder, head, ABC, come back up to resistance, then develop the shoulder, right? So we would meet the band 1, 2 times, and then continue higher. And it would be kind of like a cup and a handle too, in a way, because it would extend that shoulder out. So that's just a derivative of that other idea. There's a lot of ideas, right? The other idea would be basically same thing, right? You come up here. This right here is just consolidation, bullish consolidation. So we're going to spring up, break this high, and then continue higher. Or a derivative of that would be come up, get resisted right here, then come down and pull that right shoulder. So going back to the other one, it's kind of the same thing. We can ABC into the band, or we go up to resistance, then create the shoulder. So I know it's kind of confusing, right? But ABC into the band, come up to resistance, develop the right shoulder, or go up to resistance, develop the right shoulder. So, there's 2 different ways. But if we do end up AB, so this is where it gets complex, right? Very complex. If we do an ABC into the band, then at that point, depending how it looks, depending how the reaction looks, if we get a nice reaction out of here, then I'm not going to think about a right shoulder anymore because we already developed one. So that would be my idea right there. This would be my primary idea. Shoulder, head, ABC into the band, and then go, right? So obviously the head is only halfway there, right? So it needs to come up a little higher in order to get that ABC. So that would leave me with my final idea, which would be, and this is also still my in the same league as the primary, but basically like a 1-2-1-2. So 1 ABC into the band, right? This is the band. We hit it. We come back up. We hit resistance up into here. Then we ABC again into the band, right? And that would be a 1-2-1-2. And that, my friends, would be probably the ultimate bullish count, because that would set us up for a big wave, because a 1-2-1-2 is huge, right? If we were to go 1, 2, 3, 4, 5, that's different. But if we go 1-2-1-2, it makes it in a much more bullish environment. Like 3 rising valleys, right? There's different patterns if you just type in technical analysis patterns. One of them's called the 3 rising valleys. Now, this wouldn't be it, but that's just an example of what I'm talking about. This is more of a 1-2-1-2, which would then set us up for a big 3, 4, 5, and then anytime you have a 1-2-1-2, you have a 4-5, 4-5, right? So 1-2, 1-2, 3, 4, 5, 4, 5. So yeah, that would be. We'll talk more about that later on, but that gets us way up into the retracement levels up here. So I'm looking at. Let me take all that off here. So if I were to just draw that like this, my ultimate idea, let me change that to 1, 1, 2, 1, 2, 3, 4, 5, 4, 5, right? Getting us between, I'd say $10 and about $4.50. So in this block right in here, this block would be the perfect area to figure out either this is the pivot point of bear market or bull market. This is where the decision will be made, right here. So everything boils down to this right in here. If we can get through this, new bull market. If not, we come down for a reaccumulation. And then what that would look like would be this, which is just what XRP did, right? So we have a rise, a crash, a retrace, reaccumulation, sideways, blast off. And that would be like a big cup and handle. So there you go, guys. That's what I have for you today. Hope you enjoyed the video. If you can, please leave a like, comment, and maybe hit that subscribe button. I will put up some more videos later on. I think I had a request too for Quant. I can go ahead and take a peek at that right now. Why not? So here's the price of Quant, and I was gonna do it, but I think I'm gonna save this for the next video. So yeah, that'll be my next video. But just right off the bat, I mean, you have an impulse, you have a pullback, right? You have a rise, you you have a crash, you have a retrace, and now you're in reaccumulation. So to me, it looks bullish. Just glimpsing at it right there. You know, like going back to XRP. Rise, crash, retrace, reaccumulation, blast off. That's usually how it goes. So for example, theta would be like right here. So theta's right here. So theta still needs to come up, retrace up to like $10, $15 mark, then pull back, then go sideways, develop that sideways base on top of the you're building sideways support on top of that pivot that we are in right now, and basically just consolidate, accumulate sideways, and then go higher. So yeah, that's basically it for quant. I'll look at it more on the next video, but for now, that should wrap it up. I know people have been asking for bookmarks and timestamps and things like that, and not really savvy in that area, and I don't have a lot of time. I just do these videos just to do them, right? I'm not taking it professionally, as you would say, but I'll do my best to put in some timestamps, or if you don't see them on a bookmark, maybe I'll if somebody wants to drop them in the comment section, or I'll try to as well. But like I said, I just don't have a lot of time to do all things like that. But I'll definitely as the channel keeps growing, and if it keeps growing, I'll definitely have to make time at that point. But as of now, just shooting out ideas for fun. But yeah, I appreciate all of you guys for watching. I never thought I'd get more than 50 people watching the video, let alone a couple hundred. That's awesome. That definitely makes my day, that people chime in to hear what I have to say, and they take value from it. Again, it's not advice, it's just for entertainment purposes. But yeah, appreciate all of you guys. I will catch you on the next one.